You go home, everybody's bullish and bearish. Nobody knows what's going on. I think it's almost everybody wants to get to the sideline to figure out what's going on here. So I want to introduce Charles De La Torre. This is Cutting Edge, where we do a show every Monday at noon Central Time and talk about what's going on in the industry. We particularly focus on the Southeast location and Southern Yellow Pine and some of the other value-added products that Charles at IFP Wood is doing a great job providing the whole general area. So hope you had a good weekend, Charles. Welcome back to the show.
Ash, thanks for having me.
Yeah, no worries. So let's jump right into it. We talked last week and about the big disparity between Southern Yellow Pine and spruce, especially in studs. When you have $1,400, $1,300 9-foot studs in 2x6 and 2x4 getting quoted to job sites, it only makes sense when you have wood that you can turn from a $600 product into a value-added product that's going to probably happen. So talk to us about what you saw, what you're seeing. I know we had more people on Friday asking about that, particularly from when we talked about the show, and are becoming more interested in it. What are you seeing out there?
I think you hit the nail on the head. There's a big spread between the two, and the people that are comfortable using or have the utilitarian opportunity to do so, they choose a cheaper option, obviously.
Right.
It's just a re-education phase, and I think pricing is once again forcing people to look at it as a solid alternative.
Let's talk about the re-education phase. So everybody that's used to getting spruce, everybody's used to doing what they've always done. I mean, when you're talking about a product that can basically replace a $9 product with a $4 or $5 product and actually be just as nice, if not better in many cases, I think Southern Yellow Pine sometimes gets a disservice about how it's perceived from 10, 15, 20 years ago. I mean, it's a great looking product. It's produced at these mills with high standards, good drying, everything. It really looks good. And one of the things I always hear, Charles, is, well, Southern Yellow Pine is going to twist and warp my walls and I can't use it.
Well, to kind of key on that, really, to address that forward facing and abruptly, 2x4 obviously cups and twists a heck of a lot easier than 2x6. And if you look at the 2x4 and 2x6 or 2x4 Southern Yellow Pine and spruce markets, there's not that much of a spread to show huge beneficial use, right? But there is a cost savings. So, that re-education phase is really intriguing because 2x6 is the biggest opportunity. I mean, 2x6 9-foot studs are over $1,200, and we're delivering them to the Mid-Atlantic for a lot less than that. So it's one of those things to where you have to explain the reasoning behind it, and you can address those cupping and twist issues based on the actual grade of raw material that you're using and the opportunity and the softness that's presented itself in the market over the past couple of weeks has put us in a position where we're actually using some number 1 and number 2 prime for some of these applications, and it looks better. Now, one interesting thing, that question that I got asked personally was, well, what's the big difference? Is pine as strong as spruce? Well, pine is a lot stronger than spruce structurally. The biggest thing is that, once again, we've always done it this way, and framers like it because they can pick up 10 spruce sticks versus 5 pine boards. So that's where the biggest conversation needs to be had is really on boots on the ground, not on the buying side, because the buyer recognizes the bottom line value.
Another thing, Charles, you and I talked about this months ago. So I'm a multifamily person, and I say, you know what? Why should I have you do it? I'll take a 10-footer out the job site and have my guys cut it with a saw, right? There's a lot of things that can go wrong with that, but mostly, do you really want your crew out there cutting with a saw every single piece? Not only that, is you're losing yield when you do that, right?
Oh, you're losing a lot of yield. I mean, you've got, depending on what you're cutting, anywhere from 12 to 15 inches, obviously, when you're trimming it back from a 10-foot. And if you're cutting 18s, I mean, you got to be pretty exact. Then you've got to have the infrastructure deal with downfall. And then you take framing labor that we all know now is not inexpensive, to say the least, and taking them from doing a revenue-producing job to really a cost avoidance. That's like vertical integration in the general contracting business and somebody getting into the dirt work. But historically, they're a framing operation. So you've got some issues to combat there, but the biggest thing is efficiency. And with material, bottlenecks and some of the supply chain issues, even though they're loosening up a little bit, and we touched on that as well, there's still some problems, And then
So
one thing
how far? Well, go ahead. I'm sorry, I interrupt you.
No, all I was going to say is one thing I've noticed is a lot of the framing crews that were historically single family are moving over to multifamily because multifamily buys in bigger lots. They bought all the windows, so they're actually getting windows. They're not going to BFS or mom and pop dealer and being like, hey, I need 15 windows for 5 houses. All that stuff's already on the come, so it presents a different opportunity from the labor standpoint as well.
How far out are you right now on 2x6 9-foot trims to the people they bought them from you today? What kind of ship time could they expect to see on something like that?
We are the end of 5/16, so call it the week of 5/23.
Which probably in some cases works out perfect for people, right?
Yeah, I mean, we've quoted and closed a lot of June wood.
Yeah.
Because there was obviously a buying opportunity, so they've kind of came in and looked at it as a whole and bit the bullet and did it.
Let's go over to the OSB side of things, which kind of especially in the thin panels traded off, but even the thicker panels, I mean, over 3 weeks, even the 3/4 traded off a bit. We just traded basically, $720, $730 some dollars a thousand delivered to Washington D.C. on 7/16, right? Think about that from 3 or 4 weeks ago that was traded $1,400, right?
Yep.
And on Twitter, we were going back and forth. Somebody said that still in these home centers that product is trading at about $40 a sheet, right? Whereas this is about, I'm guessing that, I can't read the tea leaves, but if you wanted to go to a home center and buy a bunch of 7/16s, you might be better off waiting a week or two to do that. Just because as that price just continues to fall on print, they basically follow that along with them. But on the secondary market, it is trading at a big, substantial discount to what the print price is right now, from what I'm seeing.
Well, that is kind of dried up, honestly. You're getting mills that are pushing pricing. They're, some mills are $25 over print or they're at print right now.
Yeah.
I mean, that
Why
was
is
the case.
Why is the secondary market trading so? Why is the
Because
secondary market trading so high below?
Because they were able to step in the market, buy volume, and spec on it.
Okay. So will this be very long lived with the OSB mills trying to push the gas again?
I don't know. It depends on who goes down for maintenance, and we touched on that last week, and that's where it kind of bottomed because print only came off $25 last week. So historically speaking, it'll be flat this week, up $5 or $20 or whatever that number is. But you still have some backlogs. A lot of OSB plants sold into it pretty heavy, and they've obviously had to come back down to earth when you have a $400 disintegration in pricing structure in 5 days.
That's a good point.
A lot of them are still, third week of May.
So let's go to another topic. What I noticed, so we had some trucking companies that historically were high to us, and all of a sudden last week they came and they wanted to do a bunch more business. It seems like freight in general is starting to open up for whatever is going on in the world. It seems like freight's starting to open up in a lot of different places. There may be some lanes that are still tight, but I just felt since late last week that traditional brokers, asset-based carriers that we talked to have called us and said, hey, we'll take those at this, right? Or we'll look at that. Is that, am I reading that correctly?
No, you're interpreting that 110% correct, but it begs the question, what's the cause of that?
Well, I mean, so I guess there's a lot. Is it a slowdown? Is it because there's not as many containers coming over from China? Is it things that we don't see? Is it overcapacity? Let's just there seems to be more capacity than there are loads right now.
I would agree with that 110%, but I don't think there was a giant new entrance into the market. Because
no, there wasn't.
So the question is it cyclical or is it due to other variables in the market that we're not seeing? Such as shortages coming from ports and inbound shipments and guys that were running drive-ins that now, or reefers, or produce season is coming to a close in the Southeast. Are they going back to flatbeds because they gross more money? I mean, there's there's a lot of questions to be asked.
Right. Yeah. Well, I think, you read the social media going into this weekend. I think it would confuse you so much you don't know what to do. I mean, it's all right. Let's look at the stuff we know. Housing is still decent. Multifamily is certainly leading the charge right now. I think the higher end homes are still selling. I think the affordability is going to affect homes on the lower end of the range. But with that happening, multifamily should be doing well. Do I know where the price of homes is going to be in the next 6 months? I have no idea, because I don't know what the Fed's going to do or anybody else is going to do, or what human nature is going to happen. But it seems to me that there's an uncertainty. All I know is things like this always work out in a way that none of us expected. So I don't know. What's your thought on the environment going on around there over the weekend? What was have you changed your thought last week versus this week coming in, doing anything?
I mean, not really. Long term, we're bullish on housing. I mean, there's still a shortage, right? And I know everybody has their own opinion based on affordability and interest rates and what have you. And obviously, the lumber market and input costs have to settle somewhere, for it to make sense for people to be able to afford said new home. But overall, I think there's going to be a pause and a pullback. Yeah, I agree with you 110%. It's going to be, a step back and reevaluate 30,000 foot versus being at 10,000 foot and moving chess pieces.
Well, maybe this is how we can close that gap between complete our homes that are being built and that gap between permits. Maybe this is a healthy thing going on, so we can actually get back into the groove of producing stuff. I had Brian Westbury on last week, and one of the things he was talking about was, he said, I can't put a definite number on it, but he feels that because the stimulus is done, there's people that are running out of money, need to go back to work and help. That goes into construction, that goes into truck drivers. You got more people coming across the southern border that are looking for jobs. So that definitely affects production down in the Texas market in some areas. So maybe there's some things going on that we're going to close that gap in homes that we're having a hard time getting buttoned up versus permits and starts just continuing to go widen out. So maybe that's a silver lining in things.
You're 110% correct. You got to close the gap somehow, because otherwise it's completely unsustainable, and you're going to have a bunch of starts that nobody's going to be able to finish, and builders are going to lose their and they're going to stop doing it.
Yeah, exactly.
All of a sudden, what happens? But the one thing I will say, and I haven't seen a lot of people on Twitter or anywhere else, mention this, but and you and I may have discussed it one or two times, but not in any type of length, is the private equity money that's going into the single family rental business.
Yeah.
And you talk about multifamily and affordability of houses. Well, my generation or the generation before me, they don't want to cut grass. They don't want to live on a farm. They want to live in a house that they have a restaurant close by and have conveniences, right?
Wouldn't that be our generation, Charles?
Or after me, sorry. Well, I mean, you're getting to the age where you might go to one of those 55 and over developments where,
as long as they have a golf course, yeah.
Oh, they always have a golf course, Ash.
Yeah.
They always have a golf course.
Yeah.
But that's a big push too. I mean, those guys are coming in and buying already established, developed lots and established neighborhoods and moving on. There's a big push for that in the major metros that are around us: Charlotte, Greenville, Charleston, and a little bit in Raleigh. I think I heard I read it might have been from the Charlotte Business Journal, that they're estimating there's going to be $85 to $100 million spent in the single family rental industry in the Charlotte metro in the next 12 months. What does that do to affordability? Never mind an interest rate, honestly.
What it tells you is if somebody can't afford a home and there's a great big investor in there that can buy 10 of them with cash, they're going to buy them, right? And that continues to move stuff. And what Brian was saying last week too is that, okay, so let's say rates go to 5 or 6%, but your year over year appreciation of your home is 5 to 10%. Well,
it's a moot point.
He goes, yeah, people will turn their nose up a little bit, but they'll still potentially jump in and do it, right? I mean,
definitely. If there's enough value add in it, quality of life and some of those things, I would agree 110%.
Cool. So what do you guys have on the go for this week? Anything we should know about on starting out on a Monday here?
I don't know. I mean, we've just been playing catch up. Last week was a roller coaster. I mean, we went from, zombie land to riding on a roller coaster, your hands up in the air without a seatbelt on. And it happened in 48 hours. And is it a head fake like what happened in January, but it goes the opposite direction versus up? I don't know. I mean, once again, I think that, speaking of the Twitterverse platform specifically, and what you and I see.
You mean lumber Twitter. We're calling it
lumber
Twitter now.
Sorry. Yeah. Lumber Twitter.
Yeah.
There is a lot of uncertainty, and I think people are and I think Stinson mentioned it in one of his tweets. He's bullish long term, but he's very short term because they do have to realign, and it's got to be a value. But now that the majors have seen the sheer level of profitability that they've been able to create based on shortages and the disposition of some of their assets out west and the lack of performance out west, it really begs the question of is this going to continue to create volatility, or is it going to create new trading ranges? And instead of, and you've said this, $125, $150 swings in a 12-month period, does it go to $250 as an average moving forward?
Right. No, that's a good point. I did a Twitter poll this week about how where people thought lumber was going to go in new highs or new lows. There was 140 people did it, and it's a perfect bell curve.
Yep.
Which
I clicked trading range, honestly. I mean,
yeah, and that was the biggest response. 47% of the people said trade in a range, and but gosh, man, life is just makes it too easy doing that. That's why what that poll is telling me is it's going to make a move in one direction. Pretty good. I don't know what that is though, right? So,
there's no way to tell.
Right.
Because you're still having rail car issues. You're still having delivery issues. You're still having all kinds of issues. I mean, boats, once again, the last Euro ships that came in, I mean, they were postponed 7 to 10 days because they were sitting at anchor waiting on berth times.
Yeah.
Because they were unloading slag vessels.
Yeah, well,
I guess we don't make enough slag here anymore.
So there's enough. I think there's actually Euro boats hitting the docks this week and next week.
Yep.
And that's the next tranche coming in. So you should see a lot of people offering Euro out in the next 2 or 3 weeks. But listen, Charles, we'll end it here. I appreciate your time. If anybody wants to get a hold of Charles, I'll throw his email up here. Again, if you want to get a hold of us at mxlumber.com, we are the only digital B2B exchange. And Charles, why don't you throw some of that 2x6 up there so we can list it on here today?
If we have any available, you're usually the first ones to see it.
Yeah, no, I know you are. So appreciate it, everybody. Everybody have a great week. Mike will do his lumber futures from the free seats tomorrow. Wednesday, we've got This Week in Lumber with Greg Riley and Matt Beamer. Matt Lehman and I do lunch with Lumberman on Thursday, and Friday we have the materials exchange smart market call. Everything is at 12 o'clock Central Time. We're streaming it out to all kinds of Twitter feeds, LinkedIn feeds, YouTube, Twitch, everything. So please join us, and hopefully we can help you out. Thank you much.
Thanks, Ash.